Hello, everybody. So today I want to talk about 21, the new company that was announced, and it's still trading under the SPAC name of CEP. Perhaps for a few days that ticker symbol will still be there. I'm putting my Gen Z hat on, and I'm asking, should we stick with Chad? Or should we go with the new kid on the block? What's going on? What's happening? Well, first of all, I'm happy. SPACs are back. That's a good sign. That's a sign that the market is open to innovation again, that the market likes innovation again. Many of the companies that we love on this channel used to be SPACs, and people have just dismissed them because the market was thinking SPAC bad. I'm glad to see a SPAC is back, and I'm happy for Cantor Equity Partners. I'm happy for Jack Mallers, and I'm happy for 21, and for Tether, of course, because it's going to be mostly owned by Tether, this company, but the CEO is going to be the same CEO as the CEO of Strike, which is Jack Mallers. Jack Mallers will lead 21 as the CEO. They will own 42,000 Bitcoin. But make no mistake, when you see the market cap at 412 million, make no mistake, a lot of dilution is coming, and to me, this is too early. Like, we have to wait until the merger completes, right? We have to wait until the merger completes and the hype, quote unquote, settles down, and we have to see what's the price to NAV gonna be, right? If it's a price to NAV of 1, I'm gonna be interested. If it's a price to NAV, say, higher than MicroStrategy, I'm likely not gonna be interested. So I'm going to get to that in a second. And you can see the stock is up 59%. It was up much more than that, and then it went right back down. Oh, buying a SPAC on announcement day is way too risky for my blood. I am not a trader. I'm a long-term investor, and I think a lot of people who buy these Bitcoin treasury companies are long-term investors. So let's go and talk a little bit about it. They have their own metrics, and I'll talk about their metrics because, quite frankly, BTC yield and BTC yield to date, and sats per share, that's the same metrics as Saylor has. Like, I don't really see a difference between these metrics and the metrics that were introduced by Saylor, except that he named them something different. Okay, fine. Well, they're synonyms, right? There's always a bunch of synonyms, and even in TradFi, you have synonyms for different metrics, right? And so that's just the way it's going to be. That's fine. We can argue about the metrics. The transaction is going to value 21 at a pro forma enterprise value of 3.6. But my guess is it's going to be higher than that after the IPO, especially given the hype that we are seeing around 21. So let's talk about 21. So Jack Mallers has been a long time BTC player. He's been in Bitcoin for a very long time. He's made some amazing speeches. I can remember one of his amazing speech that he made at Bitcoin Madeira. I think it was in 2024. Or something like that. I've listened to a few of his speeches. I don't deny that he's a big deal in Bitcoin, and he's made some inspirational speeches. But there's the Gen Z style, and I think a lot of traditional Wall Street investors may be put off by the Gen Z style and the hoodie and the T-shirt. Right? He was on Bloomberg on T-shirts. You got that FTX style a little bit, but it's okay. It's part of a generation. On this channel, like we don't really judge people based on style or things like that. I remember back in the day covering a short seller who was saying you got a short block. You got a short block because the founder listens to rap music. We don't look at it this way. But he's someone clearly of his generation. And so clearly the appeal is appealing to a new generation of buyers. In my view, perhaps a lot of the people who are inclined to buy GameStop perhaps would love to buy 21. You can see, this XXI, that looks like like a video game or like an electronic music song. The marketing is definitely, BTC oriented. So I'll give them a kudos for the marketing. They're going after their own capital pools. I'll give them the kudos for that. Now, let's look at the investor deck. And of course, the SEC, with always the best UI out there, type this, get to this page, scroll down, and you're going to find the deck. So you can look at the deck on your own. I've made a few screenshots of the different things. And okay, they're going to be the third largest Bitcoin treasury at 42,000 Bitcoin, and that's because of a major Tether deposit, right? Tether owns a lot of Bitcoin, and so they're depositing it into 21. Bitcoin thesis, that's going to be the same for all of Bitcoin companies. They're getting a few hundred million here, a few hundred million there, a few hundred million there from the SPAC activity, right? And when you do a SPAC, that means you're trying to fundraise. So they're fundraising a little more via the SPAC. That's their one-time shot, right? Your SPAC is your one-time shot to fundraise, and so that SPAC is like Saylor's ATM on an average week is what they're going to raise on that SPAC. So good for them. Good for them. And look, they're still going to be number 3, right? Mara is still going to be ahead. And you can see that, strategy is, of course, the playbook that they are copying. And that's a good thing. I'll give them a kudos for their slides. I think the slides are really well done. This is clearly inspired from the BTC 2024 model that Saylor published open source on GitHub. You can get it on GitHub. This is clearly inspired, in my view, by that Bitcoin 21 model that was offered by Saylor and 2 of his engineers. Nonetheless, a new form, a new presentations. I like to see it. That's good. The slides are good, quite frankly. If you look at this slide is also pretty darn good. Although it makes me laugh, as Beat the Denominator on this channel, it makes me laugh that you would say the fiat currency supply is M2, right? That makes me laugh because we recognize it, right? That's clearly M2 here. M2 is just the visible part of the iceberg. Like you're having that conversation and you're thinking the dollar is only M2, while you have the euro-dollar system, which is at the very least as big as M2. So the situation is way worse than is shown in this slide. But nonetheless, you're speaking to a Wall Street crowd, so I get it, why you would write that. But it's just funny. And this slide is good too. So anyways, they talk about their business, and then they praise Saylor, and they give us some praise for Saylor in these 2 slides. And so you can see this is Saylor's journey. And so clearly, because they dedicate 2 full slides to MicroStrategy, they clearly know the playbook. They've noticed, right? This playbook has not gone unnoticed. And so that's a nice slide. Feel free to pause the video and just do a screenshot. That's another one right here. So if you're interested, you can do that. And now we're going to talk about the meat of this video, which is, first of all, the opportunity. Let's talk about the opportunity. So there's pros and cons about this opportunity, and I'm gonna comment. And of course, they present everything positively, right? It's an investor presentation. It's the goal is to be positive because you want to get people to invest. So they only show you the positives, and I'm gonna tell you what I think. So what I think is that there's quite a few positives in there. There's much neutral stuff like ETF, a really exchange traded instrument on traditional fiat rails. Yeah, of course, like every company has that. So some of Bitcoin exposure really, that's the point of a Bitcoin company. So I'm not going to comment on that. I'm going to comment on the more idiosyncratic points here. So first of all, the pros, what I find very good. They're backed by SoftBank. This is very impressive. I've always admired Masayoshi Son, admired SoftBank. SoftBank is the company who has a 300-year strategic vision. They run the funds for Saudi Arabia. Very impressive company. Perhaps one of the most impressive companies in Japan. So that's impressive that they got that. BTC native operations. This is true. I like that. And I've long said that really, why is Saylor keeping the legacy software business? Why are you doing that, Saylor? I've always said you really don't need the legacy business. The legacy business should probably be spun off. And at this point, Bitcoin is so big for MicroStrategy. At this point, the strategy business is just an afterthought, right? The software business is most likely just an afterthought at this point. And I would argue if you run the legacy business as a charity, that would barely move the needle and barely make a difference. So, but still a slight edge for them having BTC native operations. But I make no mistake, I don't think there was any attentional cost on the legacy software business anymore for Michael Saylor. All of the attention is on Bitcoin. There is no more attention for the legacy software business. At least I don't think. And the cons. What are some of the cons? Well, they talk about it's attractive to pipe investors. Well, good for them. We're not pipe investors. So what are we trading at a price to NAV right now? I'm having a hard time figuring out what it's going to be. But, I see some people saying it could be between 2 and 3x. So I want things to settle down, especially if the SPAC price is still up 100% or something like that. So I want things to settle down. Good for the pipe investors, but for us, that doesn't help us. And then they point out the backing of Tether as good. And, while there's no doubt the backing of SoftBank is superb, and I love it, the backing of Tether, in my view, it could be good or bad because Tether competes with USDC, and we still don't know what the stablecoin regulation is going to be. Like, is the stablecoin regulation going to just say you can take the profits from your bonds and you can invest those profits from your bonds in Bitcoin? It could be that the regulation is going to be very, very, very positive, but we still haven't seen the regulation, so I still see a little risk. And, abroad, of course, Tether is not welcome abroad. Like in Europe, for example, Tether is not really welcome. A USDC perhaps has a better shot at being a stable coin of the future. And so the controlling company being Tether, it's, like Tether is obviously the biggest player, but are they going to be the biggest player in a few years? So I would not put this. It could be either neutral or con. I put it as a negative here, but it could be neutral. But I definitely don't have enough info to tell you that Tether, being the largest investor, as a pro, I don't have any enough intuition about that. And what about the opportunity? Well, they talk about the opportunity, and quite frankly, this is very similar to what Saylor is doing. I think as far as being, promoting Bitcoin, educating for Bitcoin, branding Bitcoin, I think Saylor has the most inertia in this business, at least to the eyes of a traditional finance community. Of course, Jack Mallers may, and he likely has, bigger aura to the pure Bitcoiner community. But if you're gonna talk about the pure Bitcoiner community, you need to start comparing Jack Mallers to people like, I don't know, like Max Kaiser, for example, or other very influential figures in the actual Bitcoin community. And so then it's like in the TradFi community, the biggest advocates for Bitcoin is Saylor. Is Jack the biggest advocate for Bitcoin in the BTC community? Right, I would argue Max Kaiser is higher on that spot, and Stacy, his wife too. I would argue they're higher on that spot. Anyways. That's just a point. But educating, sure, why not? We need more and more companies to educate. But that's what Saylor is doing, except he never really outlined it anywhere. But that's definitely what he's doing. And of course, actions speak louder than words. Whenever Saylor shows up on a podcast anywhere, that's the most viewed video of that podcast in the history of that podcast in general, whether it's a BTC podcast or a TradFi podcast, etc., etc., etc. I almost never miss a Saylor interview. So anyways, and I think so for BTC financing, and of course, Saylor does a lot of that within TradFi. I think the edge of 21 could be that BTC financing via Strike, right? Strike and BTC and the Lightning Network, because of course Jack is very involved with the Lightning Network. We could see 21 do some efforts to raise a yield on the Lightning Network. And it could be that Jack Mallers is more inclined to play with yield earning initiatives on the Lightning Network than Saylor is inclined to do that just yet. So that could be an edge for 21. It could be one of their edge. And now this is the slide that truly, truly confused me. I'm thoroughly confused and not happy about this slide. Is this slide speaking to TradFi? In my view, and this is also what Saylor pointed out in his last interview from Wednesday. I can't remember who did that interview, but look it up, right? It's the hottest Saylor interview right now. He talks about BTC players, Bitcoiners being on the same team, right? And everybody's on the same team, and you're cheering for the same sports team. There are only winners in Bitcoin, because the more people buy Bitcoin, the more the world hyper-Bitcoinizes, and of course, the more everybody wins. The more everybody subscribes to the idea, the more everybody win. This is just like the English language. It's like saying, oh, I speak English. I'm going to tell other people, don't speak English. Don't learn English. Don't do that. Well, it's kind of, it's kind of the same thing. Like the more people speak English, the more valuable everybody who speaks English becomes, right? And so the more the world uses BTC, the more BTC Treasury companies there are, the more everybody gets more valuable collectively, right? And the more somebody cheers a sports team, the more that sports team is likely to win, and the more everybody is happy and everybody wins. It's it's really a positive sum game. And so that zero sum game slide, I'm confused and I don't understand. And let's go through each of the points, rebuttal of each point, because frankly this slide is this is not the ethos of Bitcoin. This slide, I don't understand it. So pure play exposure, and you agree if you look at that, right? What do you read, right? You read 75%, right? Because that's 3/4. So that's 75%. So as if 21 was 100% and Saylor was 75%. So let's be honest. There's no rounding at all. Like if you're being honest, the software business is worth about $1 billion, and MicroStrategy is worth about $96 billion. So strategy is 1/96 of strategy is not pure play, right? In other words, 95 out of 96 is pure play. So to say it's 75% pure play when it's actually 95 out of 96 pure play is a little disingenuous, right? Okay, Bitcoin native operation. You're giving a zero credit to that? Well, that's not true at all in my view, because 99% of the value of MSTR is pure play. It's less than a team of 10 people. The trade desk is less than 10 people. 99% of the value is pure play. Yes, there are still about 1,500 people from the legacy software business, but most of the value is derived from a pure play standpoint. And so, the Bitcoin part is Bitcoin native, if you ask me. The Bitcoin part is definitely Bitcoin native, if you ask me. The trade desk and everything like that. Anyways, 3, existing debt on the balance sheet. Really? Half? Really? You're putting only a 50%? This is classic FUD for 6 months ago. And I keep saying this on my channel. Strategy is mostly an at-the-market offering story. Mostly to this day. Like the debt ATMs, whether it's the Convert or whether it's the new Strike ATM, they've barely been tapped. It's mostly a BTC yield story. It's mostly a story of printing the shares to collect the delta on the price to NAV beyond 1. This is mostly the MicroStrategy story. So to like give them a dent in your investor presentation is like I said, I don't understand. Then debt colorization, I don't understand what you mean here. Does 21 try to make themselves look good, or do they try to make strategy look bad? And the reason why I don't understand is because the asterisk says subject to release upon certain events. So I don't know. Are you talking about yourself, 21? Most of the debt of Saylor is free and clear, and it's on the business. So and there was an instance where they pledged some BTC back in the day to borrow against that BTC, but they paid that off. So I really don't know what is meant by debt colorization. Insider ownership, again, this is also unclear, because Saylor has more skin in the game than any other guy. Now, and frankly, the buyers of MicroStrategy could be considered insiders. They're huge lovers of Bitcoin, right? They're not easily scared and going away. So I don't understand how you could put that as a plus. I'm not so sure. Is SoftBank not going to take the money at some point? Right? Is SoftBank not going to take the money from 21 at some point, or are they just going to keep it there? I'm very confused. And of course, the purpose-built KPI, like, this is a complete joke. Saylor literally invented the KPIs, right? You can't just rename something. Saylor literally invented BTC yield. He literally invented sats per share, BTC gain, BTC dollar gain. So this last one is a complete joke. But how about we discuss the actual real fact here, which is, what is 21's ability to catch up to Saylor? And in my view, that ability is likely zero. You can't catch up to Saylor, because Bitcoin is a fixed asset. What do you think happens if you try to catch up to Saylor and you try to apply that type of buying pressure? What do you think happens if you try to apply that type of buying pressure? All of the OTC desks get drained, and the harder you try, the quicker you get Bitcoin to 1 million, and the less likely you're able to do it. I mean, at this point, I would consider only a very powerful nation state at this point could potentially catch up to Saylor. A very powerful nation state like the United States potentially could, but there's no way like a $4 billion company catching up to Saylor. I just don't see it. There's absolutely no way. How about putting that in there? Anyways, I think positioning any BTC Treasury company as competitors is a major mistake. And it's a mistake that Saylor didn't do. It's a mistake that Mara doesn't do. It's a mistake that a lot of miners don't do. This is a major mistake, positioning it as competitor. This is so 20th century. This is so fiat-minded. This is so zero-sum thinking. This is fixed buy thinking, and frankly, that's unlike Jack Mallers. He gets Bitcoin. This guy gets Bitcoin. So I don't understand. Saylor regularly advocates for all companies to become BTC Treasury companies. I checked X. I find it interesting that Saylor did not tweet about this company on X. Why did Saylor not tweet about it? He tweets about every single other company. Like his Saylor frustrated about the framing as competitor? This framing doesn't make any sense to me. Saylor begged Microsoft to do it. He tweets every CEO out there. He helped Mara, he helped Saylor craft their own strategy. So I'm sad of this positioning as a competitor. And I think there could be a lot of substance for 21. And I think, of course, their angle should be to talk about, say, how they're going to try to earn the yield on crypto native rails. Maybe you can issue token that is debt, and maybe you can be the company that is the first, for example, to issue digital instruments on digital finance rails, which Saylor is not too hot on doing right now. Right? Saylor's not too hot on doing that right now. Maybe you could cross-list Bitcoin on the Lightning Network, but you can do wrapped Bitcoin on ETH, you can do that on Solana, you can do that on all sorts of blockchain. Maybe, and because Cantor is so big on the bond business and on the cash business, maybe you can take some of that cash and list those BTC USD pairs on all sorts of decentralized exchanges like DEX, DEX trading platforms, Uniswap, Jupiter. Maybe you can just create those pairs between your BTC and the USD and, or Tether, right? USDT, you can do a BTC USDT pair, list those pairs, earn a yield on that pair. You can work on various layer 2 blockchain. This would be a genuine differentiation. And I'm just sad to see this slide. This is unlike anything I knew about Jack Mallers, and so I'm sad about it. But anyways, so it doesn't matter. My feelings don't matter. If 21 ends up trading close to a 1 to NAV or a 1.1 NAV or 1.2 NAV, I'm interested. If it's trading anywhere near Saylor, if it's trading anywhere near the Chad, right, anywhere near 1.8, I'm not interested. So that's my take on it. This was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.